Now, the time now is exactly 7:30. I shall start. Thank you everyone for dialing in this evening for this webinar. Okay, my name is Felicia. I shall be the presenter for tonight. And this topic, are you overpaying for health insurance? So I think this is a $1 million question that's hanging over everybody's head. All right. So without further ado, let me start. And this is an important disclaimer because this is an insurance topic. So we'll definitely be mentioning products, insurance company name. So just a reminder that we do not sell, we do not endorse any product, we do not, by mentioning this product, it's simply just for illustration purpose. So please do not run out to get them. All right, please do review your insurance with your financial advisor before you take any action, okay? All right, and for those who have not heard MoneyOwl or new to MoneyOwl, we are a licensed financial advisor. And we are wholly owned by Temasek Trust. And our objective is to actually help everyone. We are qualified to advise, so the purpose is to help everyone to gain better financial security throughout their lifetime. And today we're going to cover 3 broad areas. A smaller area will be to actually have the understanding of Singapore's healthcare framework. Then after that will be the more important sections that we will be focusing on is that how can we actually lower our healthcare costs or reduce our out-of-pocket cash when we seek treatment. So what is Singapore's healthcare framework looks like? Okay, we would usually use this S+3M to describe our healthcare framework. So S+3M simply means subsidies, and followed by MediSave, your MediShield Life, as well as MediFund. So every Singaporean, we will qualify for some form of subsidies. And the level of subsidy each of us get will very much depend on our financial situation, which is means tested. Means tested means that they will actually be government will be looking into the household type, as well as the per capita household income. So those people who are in the lower income family group who requires more help will get higher subsidy. All right, so after the subsidies, and you can only get these subsidies if you seek treatment at a public hospital or public institutions like health institutions like polyclinic. Now then after the subsidies, that is where you pay the bill, you can pay the bill or the services using your MediSave. So we all know that MediSave is your savings that comes from your CPF contribution every month. So part of the contribution will be allocated to your MediSave. And this amount, there is a cap in how much you can keep in your MediSave. So currently it's 75,500, which you call it the BHS, Basic Healthcare Sum. And this amount will increase every year by about 3%. So this amount is actually determined by MOH, and they will announce it at the end of the year. So since it's going to come from your CPF contribution, so you will mean to say that at some point in time, when you retire, this savings or this account will stop growing. And at the same time, you also start depleting because you're going to use it for your healthcare and going to use it for your premium, insurance premium. So because of that, to conserve this amount so that it can stretch it all the way until end of life, there will be a withdrawal limit for all the services and treatment that you can use to pay using a MediSave. So that is the purpose of this withdrawal limit. So once it exceeds the withdrawal limit, so say for your bill, if it exceeds the withdrawal limit, then the balance we have to pay by cash. So if it's a hospital bill, the cash amount outlay could be very large. So that is the reason why we will need to have an insurance scheme that can help to cover the bigger bill size. And that is where MediShield Life comes in. So MediShield Life is the national health insurance, which is a basic health insurance size to cover the bill size of a subsidized ward class, which is the B2 and C ward in the public hospital. Now, however, MediShield Life also have a claim limit. They will not pay the whole bill. And the claim limit, like what I say, is sized to the subsidized ward. So it's for people who stay in the higher ward, then MediShield Life alone will not be enough. That means, then the cash outlay will be very large. And that is how integrated shield plan is developed. So it's an optional. So that's why our Singapore healthcare insurance comes in 3 tiers. So the base tier would be our MediShield Life, then followed by the Integrated Shield Plan. So Integrated Shield Plan is simply an optional plan where people have a choice to buy additional insurance policy that adds on to your MediShield Life. So together, that's called Integrated Shield Plan. And so for people who wants to even pay lower bills, they can top up another insurance called a rider that is attached to the insurance to the IP. So the IP and the rider are optional. Whereas for MediShield Life is a mandatory healthcare insurance that every Singaporean will have. Now, so MediShield Life is said to be able to cover 9 out of the 10 bills. So that means MediShield Life with the MediSave plus the subsidies will be able to cover 9 out of 10 bills with little or no cash outlay. Now, so that means there will be one bill that probably will fall through the crack. Okay, and this will be the bill. So this group of people will be probably the ones that have very, very low income, that even with the subsidies, with the MediShield Life, they may not have enough cash or enough savings in their MediSave to pay for to afford the bill. So that is where the safety net is MediFund. So MediFund is an endowment fund that is held by MOH. So the medical social worker will assess on a case-by-case basis based on means test, based on the patient's family background, to see whether do they need to tap on the MediFund to help the patient. All right, so that is the 3S+3M framework. So now, so the grants available, so other than the subsidies, there are other schemes, support and grants are provided to help Singaporeans, and it's very much targeted at people, the elderly, because for the seniors, especially if they are retired, remember they don't have any more income, so their MediSave will just be depleting, getting lesser and lesser over the years. So there are more schemes that are going to help the poor as well as the elderly. So there's a very long list, and in fact, most of these support scheme or schemes that you see on the screen here has been around. It's just that recently they have been enhanced, and the coverage has widened. And I will not go into the details. I have put them in the table. So you can find it in appendix when you get the deck. All right. So because it's a very long list, so I will not go through that. And likewise for MediShield Life and MediSave, the claim limits and the withdrawal limit has also improved, have also been enhanced. And this was announced, in fact, I think October last year. Yes, because the MediShield Life Council actually has reviewed some of these limits, and they have made it so the recommendations was accepted, and they will be rolled out from next month onwards over a period of 2 years, up to some of them. I mean, it's progressively they'll be rolled out. So it was between April, that means next month, all the way till 2027. So what you see over here are some of the areas where you can look forward to higher claim limits or higher withdrawal limits. At the same time, they also have added new benefits, so treatments that are deemed to be medically effective, and they have now put it in to allow people to claim to be covered under the MediShield Life. All right. Now, so even when you go into the table, at the end of the session, we go to the appendix. It doesn't actually cover. I couldn't cover everything, but there are a lot of benefits. So what you could, if you want to really know the entire, all the changes, you can actually, I have a link provided over here. You can go into, this is a news release, to look at all the recommendations that's put forth and that is put forth by MediShield Life Council, and that has been approved. All right, then those were so in budget 2024, there were announcements made to improve the health cover. So, and it continued all the way to budget 2025. So this year there were also announcement to widen the coverage. So the coverage not only now just on treatment, but also preventive measures. And also the focus is also on the elderlies and all the way to young children. Now, so you can see that there will be more active staging centers, and also to encourage people to lead a healthy lifestyle. They have also improved the lifestyle activities as well as your 365 app. All right, so do go in to have a look. So if you want to know more, all right, you can actually go into this press release. This can be found on the MOH website, Improving Our Health in the Next Bound, because the message is actually to get people to prevent getting ill. All right, so to means to lead a healthy lifestyle. So that is the direction that the government is trying to encourage everyone to do. So let's wrap up or summarize the first part, our healthcare framework, by using a claim. All right, so this is a hospital. So this is an actual claim, or rather, it's a claim that example that you can find it on MOH website. So Miss Tan, all right, 48 years old, Singapore citizen who went through an operation and was hospitalized for 5 days in Ward C, and she doesn't have an individual plan. Now, so I have to explain. Some of you may not be familiar how the bill. So usually a hospital bill, when they present the hospital bill, there will be 3 segments, or rather 3 categories. First is what we call the daily room and board. So the daily room and board would include your bed, your doctor's fees, your prescription, your x-ray, your blood test, everything. So all these will lump together, called the room and board. So and the next thing is, the next benefit will be surgery. And then after the surgery, there will be one called implant, if there's an implant. All right. All these things will appear in the bill. So let's say if you're implant, you will see that in the bill. And if there's surgery, you will see that in the bill. Now, so what it means over here is that, so the hospital bill after subsidy is 4,000. And assuming Ms. Tan can actually qualify for 80% of subsidy.
No, the invalid code, I don't know how to clear. I'm looking at the pimples. I cannot find.
Oh, okay. Then I appreciate if you mute yourself. Okay. All right. Then after that, we have a claim limit. Because as I mentioned, MediShield Life has a claim limit. So the claim limit will be imposed on each of the benefits. So that's why in this box here, where you see this few lines over here, what it actually means is that means after the subsidy, they will compare this amount against the claim limit of the MediShield Life. If it's within the claim limit, then the full amount is eligible to claim. And so in this case over here, the daily ward for MediShield Life is 8,000 per day. All right, so 8,000 per day will include, of course, just the ward, not just the ward, okay, but all the treatment and everything. So the ward itself for a C ward is about $48 a day. All right, so it will likely be able to fit into the bill. All right, into the claim limit. And surgery, MOH all the surgery are divided into 7 tables. And within each table, there will be A, B, and C. So the more complex the surgery, the higher you'll be on a higher table. So in other words, so 7C will actually be the highest. And the claim limit will also be the highest. So the claim limit for 7C will be, say, 2006. Whereas 1A will be the least complex surgery. And then the claim limit could only be like $260. So in this case, Ms. Tan, hers is under 5C. So, okay, somewhere on the high end, all right? So assuming everything is within the claim limit, so that means the bill under subsidy will be the same. Now, however, MediShield Life wouldn't pay for the first dollar. So they will have to minus off the deductible. And then after that, another 5 or 10% off the balance bill. So in total, MediShield Life will only pay out $2,250. That means the patient will have to pay the deductible and the co-insurance, which is $1,750. So how can Ms. Tan pay? So she can use her MediSave, all right, or cash, or if she's not enough MediSave, she can also use MediSave plus cash. Now, so MediFund, how MediFund kick in is when the patient don't have the cash and do not have enough MediSave balance for this $1,750, then she can actually approach the medical social worker in the hospital, who will then assess if they could withdraw from MediFund. So that is how the framework is applied to every bill in the public subsidized ward. Okay. Then quickly, now we will move to the next segment, which is how to lower our healthcare costs, right? So 3 strategies. First of all, prevention is always better than cure. All right. So that's why there are a lot of schemes from Health Promotion Board. So if you look at all these logos here, the NutriGrade, 365 is the app where you can go for free passes, and then Active Edgy is where the government actually gives money for you to go and book attendance court. So all these initiatives are meant to encourage Singaporeans to lead a healthier lifestyle, and healthier lifestyle should start from birth. Okay, it's all about not eating well, but eating right. So if you eat well, if you eat very expensive food, they may not necessarily give you the right nutrition. So it's about eating the right food that can give you the nutrition that can keep you healthy. And the other area that the government wants to encourage under the Healthier SG is to go for regular health screening, so that if there's any potential problem, you can pick it up early, because a number of illnesses, many illnesses do not have symptoms. But if you wait for the symptoms to surface, then it could be too late, or it could be very costly to treat. So that's why if you go for health screening or go for vaccination, you can, by and large, actually prevent serious illnesses along the way. And if you do have a particular medical condition, one of the 23 chronic diseases, then there is this management program that can help keep the disease under control, so that you will not become too serious that you require further treatment. All right. Then of course, at some point in time, no matter how well we take care of ourselves, okay, there will be a point in time that we'll probably still fall ill. Okay, then what do you do next? All right. So the next thing is that, of course, is to try to use public healthcare facilities first. All right, because most of the time you do get some subsidy. All right, you may not get the most. All right, but because not all the treatment or not all the diagnostic tests you can actually claim. All right, so that's why if you go for the public treatment, okay, go for public healthcare, you can cut down a lot of unnecessary costs. Now, then how can one actually qualify, or not qualify, get subsidized treatment at a public hospital? Okay, there are actually 2 ways of doing it. One is you take a queue, all right, go to the polyclinic to get a referral letter to go and see a specialist. So once you get a referral, once you're being referred by a polyclinic to see a specialist, then the specialist consultation will also be subsidized. Okay. And then thereafter, if you do need to go to the hospital for treatment, then you will be able to choose whether you want to go to the P2 or C ward. However, the waiting time can be very long. Okay, from the time you get the referral letter to be admitted to the hospital or to even see the specialist can be as long as 6 months. All right. It's anyway, at any time between 2 to 8 months, it is very long. So then the other way of getting subsidized treatment, which is the quicker way, then of course is go to A&E, all right, emergency ward. But of course, we all know that for emergency ward, you need to be fairly serious before they can admit you. All right. So, and not every one of us could qualify for subsidies or the maximum subsidies. Then that is where we need like insurance. Okay, we definitely need insurance, and buy them early so that when you're young, it's cheaper, and at the same time, importantly, you're still healthy, and you still can be covered. Now, so many companies, your employer may actually also provide group insurance. So in an event of claim, always claim from the company first. All right. And then because your integrated shield plan, your personal insurance, most of the time have a claim limit. So if you claim from your own insurance, then you may reduce the claim limit. All right. Now, so for group insurance, most of the group insurance, but of course, having said that, don't just simply depend on group insurance, because there are people who make this mistake by not buying their own personal insurance, because there are arguments that, okay, I got very good group insurance, company provide me very good insurance, that I don't need to buy. So they only buy for their family. All right. However, majority, I would say probably all, especially for hospital and surgical, group insurance, they are not portable. Meaning to say that when you retire or when you leave the company, this insurance will just stop. And if you have been with the company for very long, along the way, you may have picked up some existing conditions. And then when you no longer have a group insurance and you thought of buying your own personal insurance, you may not be insurable. Okay, so even with a group insurance, you ought to have some cover in private insurance. So what kind of insurance should we buy? Okay, or do we hope that we can buy everything, right? All right. But we only need to buy insurance for events that can result in a huge financial loss. And a huge financial loss, there are only two categories. There will be a loss of income because you no longer can earn. And the other huge financial loss will be a large medical or caregiving or care expenses. So a loss of income can be due to a premature death. It can result from a premature death. So premature death means that when you pass away, you're leaving behind dependents. They are still depending on you financially. So without this future income for them, then your dependents will have problem living life as the same standard of living. And of course, you can also, your ability to earn will also stop should you suffer disability or a critical illness. So for critical illness, it could be, may not be able to continue working for a period of time. It could be temporary, but it could be a few years, all right? Whereas for premature death, the loss of income is permanent. Now then, for large hospital bills, usually it's a result due to hospitalization and surgery, and also chronic outpatient treatment. So chronic outpatient treatment, most of the time, it's expensive and can be for long term. Say, for example, kidney dialysis. So the cost will add up because over a long period of time, the treatment not only expensive, but you have to continuously receive treatment. And so that is the reason why you also need to have insurance to pay for this treatment. And slightly similarly for critical illness. So over here, you'll see that critical illness appear on both loss of income and also large medical expenses. That is because critical illness policy usually serve two purposes. And for under the large medical bill, because not everything related to critical illness is claimable. Right? Say, for example, you may want to buy certain supplements, or you want to go TCM to get certain herbs. All these you can't claim from your shield plans, because sometimes not even your group insurance. Okay, so whereas for critical illness policy, because the payout is usually in a lump sum, of cash, and then that's where you can use the cash to pay for all this alternative treatment or medication that you need. Now, and then of course, severe disability will result in you incurring care expenses. Now, so severe disability can occur due to an illness, due to accident, or purely due to old age. And in Singapore, severe disability is defined by not being able to perform any 3 out of the 6 activities of daily living, which will include washing, feeding yourself, dressing up, mobility, moving a place to place, transferring from bed to chair, and also not being able to what's the last one? Toileting. All right. So any 3 out of 6 once it's been diagnosed and certified by the doctor, that is considered as to be severely disabled, and you may not be able to work, and you might need someone to help with all these activities. So all of us have limited resources. We can't buy every type of insurance. So there must be a priority. What are the more important ones that we all must have or should have before we consider the rest if budget allows. So in this slide, you can see that for loss of income, the most important is life insurance if you do have dependents. Then following that would be critical illness. So disability income is of a lower priority. It is quite expensive depending on age and occupation and the amount of replacement income you want to have. So I would say that it is not really the most important insurance to get. Okay, so it's good to have if you have the budget for it. And then for large hospital bills, then of course it's your hospital and surgical plans. And then the insurance, the critical illness policy is then meant to cover those costs that you cannot claim under the conventional shield plans or hospital plans. Okay. Then of course, the next thing that is also important would be long-term care, which is to take care of the care expenses when we are severely disabled. So over on the screen, you'll see 2 QR code. When there are time, please go in to have a look at MoneyOwl, the Owl Insure. That is where we actually break down by life stages. So go to your life stage and find out what are the key insurance policy that you ought to have. Right? Then what should we then buy to cover this risk? So primarily always consider national scheme first. Some of them are mandatory, some are not. So even if they are not mandatory, you should not opt out because the premium is national scheme premium usually definitely more affordable. So let's say for loss of income, under the national schemes, we have our DPS. So DPS will cover Singaporean up to age 65 and up to $70,000. So 7,000 is not a lot. So it is actually meant to cover the needs of dependents for the initial 2 to 3 years, so that after that, hopefully they will be able to adjust and find other sources of income, right? And of course, for home protection scheme, it is meant to cover if you have a HDB flat where you're taking a loan from HDB, then this is mandatory as well. So it's to cover the outstanding loan so that in an event, should you no longer be around, then CPF board will actually pay out through HDB to clear your loan so that your dependents will not have to worry about the outstanding mortgage. Right? And these two are term insurance, so the premium will be deducted from your ordinary account. Then for medical related insurance, under the national healthcare schemes, we have the MediShield Life to cover hospital and surgical, as well as CareShield Life to cover long-term disability, okay, severe disability, the long-term care insurance. And for some of us here, we may have the older version, that is the ElderShield. And CareShield Life is mandatory. So starting from people who turn age 30 from 2020, you'll be placed on a CareShield Life. And the earlier cohort, you could be under the ElderShield, which is not compulsory. But again, you should not opt out. All right. So these are medical related. So that's why you'll be deducted from your MediSave account. Now, and of course, if you can, national scheme basically will just be the basic coverage. So if you see that there's a gap and you want to have a higher coverage, that is where you can consider private insurance coverage. So under the loss of income, then you consider term insurance, assess how much you need. Okay, we have an insurance analyzer on MoneyOwl on our website. You can use that to assess how much for insurance you need, and then you calculate what is your gap. All right, so you can use a term insurance to cover if there's a debt gap. Now, and then of course, and you also notice that there are no national schemes that cover loss of income due to critical illness. All right, so that means critical illness policy, you'll definitely have to get it from a private insurance company. But they are not very expensive. Later on, I will have a table to give you an idea how much actually it costs, okay, for a critical illness policy. And of course, then the DI. And of course, for large hospital bills, that is where you can upgrade or enhance your MediShield Life to integrated shield plan. And for long-term care, that CareShield Life, if you find that the CareShield Life payout is not sufficient, you can add on a CareShield Life supplement to enhance the coverage. Okay. Now, so of course, for life insurance, there's only cash. You have to use cash. But for the other two medical insurance, because although they are offered by private insurance company, they are approved by the government. So you can use a certain amount from your MediSave to offset the premium. All right. But of course, there is, like as I explained right at the start, there is a withdrawal limit for every service or every treatment. So for premium, Integrated Shield Life, for Integrated Shield, the withdrawal limit is based on age. So if you're under 40, it'll be $300. And if it's between 41 to 70, it's 600. And of course, 71 and above will be 900. Now, so if your Integrated Shield premium exceeds the withdrawal limit, then the balance will be used by cash. Right. So likewise for CareShield Life supplement, you can use up to $600 from your MediSave to purchase this, which is currently offered by Singlife, Income, and Great Eastern. Now, so this is the $1 million question that probably everybody signed up for this webinar. Okay, so especially after today's news on integrated shield plan and on the health planner. Now, so people will always ask, okay, so actually do I need an IP? And then should I switch on IP? Should I downgrade my plan? You know, and then if I haven't got an IP, if I want to buy one, you know, what are my consideration? And then of course the most expensive, another $1 million question will be, do I actually need a rider? All right. So I hope this portion probably will run for another 20 minutes or 35 minutes, will help to answer your question. This question. Okay, so what is the integration plan? So not to assume that everybody know what is the integration plan. So basically, like MediShield Life is only for subsidized, it's only enough to cover a subsidized ward. All right, so which are the B2 and C ward. So if you stay on a higher plan, then if you do not want to have any do not want to fork out too much cash, then you can actually upgrade by buying an additional private insurance. All right, which is, so they have altogether 3 plans targeted to meet the bill size of different ward. So if you can match. So if you want to go to a B1 ward, you buy a plan that can cover the B1 expenses. And then if you want a private hospital, then it's the most expensive, then you have to buy a private plan. So when they do things stacked together is what we call the integrated shield plan. All right. Now, this table, you can find it on the MOH website. So basically, this table shows you how much cash you will have to fork out if you start buying an insurance from 80 all the way to 800. Okay, so over the lifetime, what is the cash outlay if you're going to buy a private hospital IP? And they compare it against the 7 insurance shield providers. So over here, you can see that Health Shield is the most expensive, AIA will be the most expensive, and then Reference is the lowest. Okay, and then Singlife is somewhere at the bottom. So in total, and this is just the IP, you know, the private plan alone. So it does not include the premium deducted for your MediShield Life. It also does not include the cash you're going to pay for your rider. So it's just purely that layer of IP, right? Now, then this is the premium for a Class A plan, means it will cover up to the public hospital on in the A ward. And you can see that cash outlay is significantly lower, all right, by half, all right? And of course, the dark blue or gray portion, this is your MediSave, okay? What you use to pay MediSave, because integrated shield plan, you can withdraw part of it from the MediSave. Then of course, then you look at the B1 plan, the cash outlay will even be lower. And this is the premium, projected premium. Okay, so it is not entirely accurate. First of all, because this table, this is taken from a premium table of 2025. All right, so we all know that IP premium will only get more expensive. So it's just to give people a flavor, right? To have an idea how expensive an IP can be, and also how affordable it is if you choose the right plan. Okay, because this is from age 0 to 800. And of course, none of us are age 0 today. So the good news is, some of you already have tried this app, I believe. So it's called the Health Insurance Planner. So this plan is available on CPF website. So you just need your SingPass to log in to try out. So this app attracted a lot of conversation in our chat group. All right. So it gives you 3 options. Okay. One is just to project. If you only have MediShield Life, you can project how much of MediSave will be required over the period of time on the assumption that and then for IP, all right, so this will be on the assumption that the IP premium increases at 5% every year. All right, so if the projection is for 20 years, okay? So of course, some people will say that, oh, 20 years not enough, especially if you're very young, 20 years will not be enough. But I guess, I do not know. Anyway, this planner was just launched, was just announced today, or just launched today, not too long, probably yesterday. So give your feedback to MOH or to CPF board, and they will probably review it and they will improve on this planner. Okay, at the moment, this is what is available. So, which is not too bad. So most people, about 3 million people have an IP. All right. So, and of this group of people who have IP, about 70% of them actually also have a rider. So let's say if you don't have a rider, you can click in the middle portion. So this bars here simply tell you that this pink color is your cash that you have to pay over the next 20 years. Okay, so because the projection is 20 years, right? And then, of course, if you have an rider, then this is the cash portion, okay, the purple, because the rider is fully payable only using cash. So that's why the amount that you pay for a rider could be more than, at some point in time, it will be more than your integrated shield plan rider, integrated shield plan premium. Okay, so go in, scan the QR code and go and try out. So these colored bars are all the out-of-pocket costs. So can be quite a lot. And this app or this planner also allow you to compare your existing IP plan against three other providers that you can choose, because there are 7 providers. So other than your own, you have other 6 other providers. So you can just select which are the ones that you possibly want to have a look, and then they will churn out this result for you. So over here you can see that your current plan, has we cannot look at the purple bar, okay, because this is the riders. And for other insurance policies, they do not include the riders. So what you can only look at is probably the cash portion for your integrated shield premium, all right, and see whether are you paying more or not. And if you are interested in a particular plan, all right, then you can actually click and go in to see the difference in terms of the premium that you'll be paying. Now, I find this comparison, personally, I find this comparison very dangerous. All right, because you will end up, or you may end up, which I hope not, may end up people making very unwise decisions. So for integrated shield plan, one thing you must remember is that the benefits may not be the same. All right, so you're not comparing apple to apple. So some insurance, some IP might be more expensive because they have better benefits, they have higher claim limit, especially like cancer limit, okay, cancer claim limit, pre and post benefit. They have different durations. So don't just go purely for the price. Okay, I think it's not very fair, okay, to the plan. If you are just comparing purely on the price, you should actually compare on the benefits. Look at, because it's a very long list, okay, all the IP program have a long list of other benefits that MediShield Life doesn't have. All right, so when you look at the benefits, look at which are the benefits that matters to you, and then you select the one that gives you the most favorable, and you balance out with the premium that you can afford. Because like what I say, premiums will only get more and more expensive. All right, so you choose one that you can afford over long term, and if you choose the right plan, it is really not entirely out of reach. All right, and some of the key consideration when you want to select an IP plan will be, number one, what is your healthcare expectation? Importantly is that, can you qualify for subsidies? If you can qualify for maximum subsidies and you don't mind public hospital B2 and C ward, that means no aircon, 6-bedder, 8-bedder, and then being looked after by a team of doctors and many nurses, then you actually don't need an IP. Okay, yeah, MediShield Life will meet your needs. But let's say if you prefer to have to have better service, you want to have your own toilet, you want to be in the aircon room, you know, you want to choose your own doctor, then definitely you need an IP. It's just that there are 3 or even some insurance company, some insurers will offer up 4 IP plans. So you choose one that can that is more affordable, because ultimately the strength of IP is that they do have very good features or benefits that MediShield Life doesn't have. Okay, one of them is actually your pre and post hospital, and the other one is the claim limit, especially for cancer. Okay, because they will have a higher cancer claim limit that you might need. At the same time, pre and post treatment. Now, for pre and post hospital treatment, for pre especially, it doesn't mean that you definitely, what does it involve? Pre-hospitalization treatment means like before you go for surgery, you may need to do blood tests, you may need to do X-ray, you may do MRI, and then you may need to consult the specialist. Now, all these are claimable under pre-hospitalization benefit if that diagnosis end up with you seeking treatment, having to be treated in the hospital, be it a day surgery or be it warded or as an inpatient. If at the end of the day, after all the tests, you don't need to go for the treatment in the hospital, then this is not claimable. All right, so that's the reason why, if you're not sure, let's say if you have a knee problem, knee pain, then you're not sure whether do you require a knee surgery or not, then my advice would actually, you should go to a polyclinic to get a referral letter to go and see a specialist, and then you pay a subsidized rate. Then at the end of the day, if the results come out, normally you may have 2 options. One is that you go for surgery, one you don't need to. So if you don't need to, at least with the subsidized rate, you didn't fork out a lot. But let's say if you need to, at least you can still choose and decide which doctor you want, or which hospital you want to go to, or which ward you want to stay. So that is one way you can lower your healthcare costs. All right, that means during the diagnostic period, you don't necessarily have to go to a private specialist. All right. Now, then, of course, post-hospitalization is where you, after discharge, you have to go back and do your review, do your physio, etc., etc. All right. Now, and finally, also the most important is affordability, because there are 3 plans or up to 4 plans, IP plans. If you don't go for of course, the private hospital will be most expensive, right? So it really depends on your affordability, because you will only get more and more expensive, and come to a point in time, you'll be definitely cash outlay with $2,000, especially after 75 years old. Okay. And however, to us, IP is still necessary, especially when you're not sure whether you would qualify for subsidies. Because if you don't qualify for subsidy, if you're paying the full cost, it's still going to be very expensive. All right, so at least IP can cover that. And finally, the same thing that I mentioned, if you just compare just on the price, that is where the danger is, because you could have certain existing medical condition that you may not be aware of, not diagnosed, doesn't mean you don't have. Because I told you some conditions don't have symptoms at all. All right, so if you switch, then you may end up, the new condition may not be covered, or will not be covered by the new insurance company. So if you want to do any adjustment to your plan, then I would suggest you switch within the same insurance company. It's easier to downgrade, but when you upgrade, then any new existing condition will not be covered. All right, so take your time. You don't have to rush just because the planner came out and you suddenly realize that, wow, it's going to cost me a few $100,000. Okay, take your time. All right, take a deep breath. All right, and think about your future healthcare costs. If you really think that you do need the IP, then save up for it. All right, it should be one of your expenses in your retirement budget. So whether does it come from your CPF life payout, or does it come from your investment, or come from your savings, all right, you have to fork out a budget for it, fork out a piece of it to pay for all these medical premium. How much? If you're just going to get an IP1 plan, probably about $400 per month. So that's about like $4,000 a year, because that is the factor, that is to pay for the cash outlay and probably even the binder. All right, so about $500 a month. So $6,000, okay? Then, but of course, you're going to go for the highest plan, then you're going to budget a much higher amount. So really, there's no right or wrong answer, whether should you have an IP or not. You just have to ask yourself these 3 questions. Do you need one? All right? Now, then after that, of course, the third tier of our healthcare insurance is rider. So do you need a rider? Again, there's no straightforward, it's not a yes and no answer. So what is a rider for? Basically, is to lower your out-of-pocket costs, because your MediShield Life, your integrated shield plan will also have a deductible and co-insurance. So deductible is typically $3,500 and co-insurance is another 10% of the remaining bill. So if your bill size is very big, say for example, it's $10,000, that means you will have to pay $3,500 plus another $650, so about $4,000. So if you don't have a rider, then this $4,000 will have to be paid. You can pay using your MediSave cash. All right. But let's say if you have the rider, then you only need to pay as low as 5%, which is capped at $3,000 if the treatment is approved and also treated by your insurance panel doctors. So let's say if you take a $10,000 bill, that means you're paying only what, $250? Okay, sorry, $5,000. So $10,000, 10% is $1,500. Okay, 5% of it. Now, so it's handy, okay? It's good to have. I wouldn't say it's a must-have, all right, if you have a budget, because rider can cost more than your integrated shield premium itself. And don't forget, rider, you can use cash, all right? Now, it comes in handy if the bill is small, because if your bill falls within the deductible and co-insurance, say for example, your bill size is only $5,000, then you realize that integrated shield plan, after minusing off $3,500, another 10%, you hardly can claim anything lah. All right, where else that $5,000, your integrated shield, your rider will just pick it up and just need to pay $250. Okay, so however, then you have to weigh the pros and cons, because the premium is going to be very high. So is it really worth it to be paying like thousands of premium just to cover that, that once in the world episode? It's like, it's not like you're going to go into the hospital and then incur a small bill every other year, right? So if it's like once in 5 years or 1 in 10 years, but over that period of time, what would be your rider premium going to be? So you have to weigh that balance, all right? You have to weigh and balance it out. However, rider insurance company have also been improving their riders to expand the coverage for cancer treatment. Because I think all of you might be aware that since 2022, MOH actually came out with this cancer drug list. So any treatment that falls out of this cancer drug list, you cannot pay using your MediSave. You cannot claim from MediShield Life. You also cannot claim from integrated shield plan. All right, so how can you pay for this treatment? There are only 2 ways. One is using the rider, and 2 is using your critical illness insurance. All right, so if you do have a good critical illness policy, then you may consider a rider may not necessarily be required, because your lump sum cash from your CI policy can actually cover this treatment as well. All right, now then of course that brings us to the next next health insurance, is that do you actually need CI and a CI policy? And the answer is definitely yes, because not only does it cover loss of income, so that during the period of time where you're not working and you can focus on your recovery, you don't have to worry about paying your bills. And of course, now all the more is important because of the cancer drug list, and also to pay for other alternative treatment. Now, then how much do you get and what should you get? So the priority, it should be the late stage CI. Means for late stage, also for cancer is stage, they go by stages. So it means stage 3 onwards. The reason why this is a priority is because it's a high chance that you will not be able to work for a period of time. So you'll definitely need the income to help you pay your living expenses. And the recommendation is 4 times of annual income, which is also in line with the MAS basic financial planning guideline. Okay, 4 times of annual income. Now, So this is the most important CI that you need to have. After that, so you must have this first. And after that, if you think you still have a little bit of money, okay, after paying for your after saving for your retirement, etc., and you still have some budget, you can consider getting the early or multi-pay CI. So it's good to have because they are more expensive. And because it's for early stage, so you don't really need to be covered for so much. So I think 1 year of annual income will be good enough. All right. Partly also because it's quite expensive. So over here, you will see the comparison of the premium of the different types of CI. So another reminder, hey, we are not endorsing this product or the company. Okay, we simply have done the research and then pick up and found that, oh, Ethica late stage CI is the lowest. Okay, so male and female premium. So you realize that, you know, if you're young, it probably cost you less than $20 to get 100,000 coverage. All right, for non-smoker. But of course, you're older, then it's more expensive, but always get it when you're still young and you're still healthy. And then you realize that for early or late stage will be more expensive and multi-pay will be slightly more. So the difference between these two types of CI is that for early and to late stage means at any stage, the moment you're diagnosed, they will pay out. So it's only a lump sum payout. So that means you only get it once. So between early to late stage and the multi-pay CI, I think if you do have a budget for an early to late stage CI, then I think you must well squeeze your pocket a little bit more to buy the multi-pay because better benefit, because not only that it can cover, it will pay out at any stage, it will also pay out more than once. That's why it's called multi-pay. So it depending on which insurance company, some pay out 3 times, some pay out 5 times. But at least the coverage is bigger. So that's why it justifies that premium is higher. All right. So if you want to find out more and you're not sure where to go, you can come to us. We can connect you with iFast. We don't sell any insurance products, but we can connect you to iFast, all right, to our partner, and who will bring you through more of this CI products. Okay. Now, then finally, we come to, okay, I think I have to speed up a little bit. Okay, long-term care. Why do we need long-term care? So according to statistics, Singapore is aging very quickly. And of those people who are 65 and still healthy, according to MOH, 1 in 2, that means half of this group of people may suffer severe disability in their lifetime. And people who are in severe disability, on average, all right, they live for 4 years. Okay, after that, they'll expire. However, there will be a small group of them, 3 out of 10, may actually live longer than that. So that's why, that's the reason why ElderShield was revamped or being replaced by CareShield Life in 2020. It is to tackle this problem where people could be in severe disability longer than 4 years because ElderShield pays out is only for 4 years. Now, so how much do you need will then depend on what is the type of care you require or desire. So let's say if it's a home-based, meaning to say they're at home, maybe either you hire a helper to take care of you, or maybe one of your relative actually quit and take care of you, then you realize that the cost is lower. You still involve some cost because you still have to go back to the hospital or go to the clinic for medical review. And then the next one will be center-based. So these are like daycare. That means you go there in the day and then you come back at night. So the range of fees that you see here is before subsidy. And there is a range is because it depends on the amount of subsidy you get. And the price also exclude transport. All right. So that means you need, so because if you're on a wheelchair, then you will need transport to special kind of transport to actually bring you to the center and back. And also will exclude the expenses for the helper. So let's say if you also have a helper who accompany you to the center, so that is out of this. So you just add up. And then of course, the most expensive will be nursing home. So some patients may need them if they require round the clock medical attention, they may need to go to nursing home, or some of them, they may not have any family at home to can take care of them. Now, so these are the costs before subsidy, and you cross-reference it to how much CareShield Life and ElderShield is going to pay out. All right. So for ElderShield is 400 for 6 years. All right. And then for CareShield Life, the premium will increase with age up to 67. So likewise, the payout will also increase by 2% every year. So it starts also, if you are 30 years old this year, then you start your CareShield Life payout 662. So you increase by 2% every year all the way until 67. So if you don't make any claim during this period of time, then the maximum payout will be 1,377 should you file a claim. So how much is your payout will then depends. So it's either up to 1,377 or upon claim. So the moment a claim is filed, the payout will actually stop increasing. Okay, so that means if you happen to be severely disabled, and at that year the payout is say 1,000, then you'll be 1,000 all the way as long as you are severely disabled. Okay, now so if you compare it across with, then you realize that that is it's not enough. Now, so one point to note is that CareShield Life Council is actually reviewing this payout and the premium. So if they find that the payout is insufficient, they may actually revise it. Okay. We do not know when it'll be announced. They'll be reviewing sometime second quarter of this year, towards the end of this year. And well, we may, so keep informed, stay informed. The announcement will come anytime end of the year or next year. All right. Now, so if you want to match with the type of care you want, okay, you can actually add on a private supplement, as I mentioned. Singlife, Great Eastern and Income has them, and you can use up to $600 for from your MediSave to pay for the premium. But let's say if you're already above 65 and above, and if you find that the private supplement is the premium is too expensive, then you can probably consider using your CPF Life payout, okay, that 1,004, 1,007 that you receive to help offset this cost. Right. So if you're not sure what you have, okay, all of us, sometimes when I ask people, do you have individual plan? Some say no, some say yes, some say don't know what plan, don't know also. Okay, you can use your SingPass, log on to the CPF, your CPF account, go to your dashboard, and if you click on healthcare, they will tell you what insurance you have. So in this screenshot, you will see that, okay, there is this Health Shield, all right, from AIA, and then the premium paid using your MediShield Life money. That means for MediShield Life, the premium is $1,000. And of course, this amount is fully deducted from your MediSave account. And then of course, for long-term care, what is the national program we have? Okay, now, so I've come to the end. I have 2 minutes. I can probably only take one question. All right. Anyway, so do scan this QR code and we will send the deck to you. So the deck will also include the appendix that looks like this. Okay, so it's a more detailed one, okay, to let you know what kind of the amount of subsidies or enhancement you will enjoy. And of course, on the left, you can join our money chat. So if I don't have the time to answer all the questions, if you join money chat, you can type a question in the chat. So we will try to answer the chat during office hours. So if you send the chat, after office hours, then it may take a while for us to get back to you. All right. Okay, so let me check if there are any questions.
Hi, Felicia.
Wow, there's a lot actually.
Hi,
Okay.
Felicia. Can you
Yes,
hear me?
hi.
Hi, this is Vivian from MoneyOwl, right? So our colleagues are hard at work answering the questions, but we thought that there's one specific question that we'd like you to address to everybody.
Sure.
So the
Sure.
question is, should we downgrade our IP plan after we retire and riders are getting more expensive? Should we downgrade?
That's why, like what I say, there's no right or wrong answer. It's depending on affordability. And of course, affordability is because you want to downgrade because you couldn't afford it, right? And number two, of course, more importantly is the features. You buy the IP because IP is still a very good enhancement to MediShield Life. Like what I mentioned, there are benefits that MediShield Life, you can't claim from MediShield Life. All right, things like your pre and post. And top of our mind actually is the pre and post. The pre and post bill can be very expensive. So if you want to downgrade, yes, you can also consider IP, the B1 plan or the standard B1. Okay, that out of the 7, if I'm not wrong, 6 shield providers actually also offer the standard B1. So the standard B1 is one that is really comparing apple to apple. Only for that plan, you can go for the lowest quote. The rest of the plan, you cannot go for the lowest quote. It's not fair because you're really not comparing identical products because their benefits are all very different. The claim limit can also be very different. All right. So if you really want to compare apple to apple, the standard B1, you can go into MOH website. I think in my deck, I do have a QR code that allow you to compare all the benefits. Is on MOH website. You can compare all the IP programs that benefit across all the 7 providers. Okay. And then, of course, for riders, like what I mentioned, what's the purpose of the rider? If you are thinking the rider is just to help you cover your deductible and co-insurance, that means a very small portion. Unless you're going to, that is really the balance. Do you really go into the hospital so often and then you need your rider to cover? And don't forget, the co-insurance and deductible, you can pay using MediSave. And MediShield Life will also pay part of it because MediShield Life deductible is lower, 1,500 or 2,000. Okay, let's say if you're going to stay in a B1 ward, then MediShield Life deductible is 2,000. All right, so which means to say MediShield would still be able to pay part of it. Okay, it doesn't mean that when you have an IP, MediShield Life doesn't pay at all. That is the misconception most people have. Your private insurance company actually don't pay everything. Part of it, they will actually get reimbursed from MediShield Life. So MediShield Life simply will pay the portion that they would have paid if the bill is a B2 and C ward. You know what I'm going to say? So if for the same treatment, if they're going to pay a B2 and C ward patient 2,000, for example, then they will also reimburse 2,000. Okay, in a very simple explanation. Okay, so that means net, the out-of-pocket cost may not be a lot. So IP the benefit is probably a higher cancer claim limit as well as being able to cover the non-cancer drug list. But as I mentioned again, you can use CI cash payout to pay for this treatment. All right. I hope that answers your question. Think through. All right. Yeah. Think through whether if you want to actually downgrade is an option. Yes. Especially I personally probably private hospital, well, you can see the difference. Use the planner to make a comparison. That is one thing you can compare between a private IP and a lower plan. Huge difference. Okay, then that's where you want to probably make a more informed decision. Like what I say, if you really still like to stay in a private hospital, have lobster porridge and then, have your own TV and your own toilet, then you just have to bite the bullet and save up for it, or just to factor that into your budget when you're retired. Okay. Any other? Okay, let me see. Okay.
I think we probably have time for.
Okay, maybe you pick for me. By the time you'll be 9 o'clock.
Actually, yes, actually there are many questions, and I'm actually thinking that we could perhaps answer this offline. So we will try our best to answer the questions in this chat via our Telegram community group. So if you would like to, please scan this QR code on the left side of the screen, right? The Telegram community group. But we do have the caveat that we might not be able to answer all the questions, as some questions are really specific, or some might be too vague and we require more context to answer these questions. So just a caveat from there as well. But
Yeah.
I think my colleagues Dennis and Daphne have been trying to answer as many questions as possible here. We hope everyone benefits from this.
Right.
And yeah, I think.
And also, let's say if you use the Telegram chat, we will try to answer, like what Vivian said, we'll try to answer the question during office hours, but we will not answer comments. So let's say if you say that, oh, why is the IP premium so expensive? Seriously, we can't answer those questions, all right? All right, so we will have to look at the question. We may not be able to answer all of them. Okay, so it really depends on the question itself. Okay?
Yeah, but maybe one more question we can ask, right?
Okay,
So someone
sure.
asked, if I stay at a B2 ward, is MediShield Life enough and do I not need an IP?
If you say in the B2, okay, MediShield Life will be enough. They may be still require, because the subsidy will be lower. If I'm not wrong, it's up to 65%. But you will likely be within the claim limit. So you can still use, because you can still use your MediSave to pay for a deduct. For B2, the deductible is 2,000. All right. So you can still use your MediSave to pay. You may have to, you may require a small cash outlay, but it wouldn't be very big. Okay. A B2 ward size, MediShield Life will still be able to cover with a very small, if there is need to, probably a very small cash outlay as compared to other higher wards. All right.
Felicia, can I get your help to go back to the last slide with the Telegram QR code and the
Okay,
HubSpot
sorry.
QR code? Thank
That's
you. Should
that,
be
sorry.
right at the end. Yes, here. So I think, Vincent, you're asking for the Telegram QR code. You can scan it here. Can deductibles and co-insurance be paid with MediSave? I think that's a good question.
Yes. Yes. Up to the withdrawal limit. Okay, so MediSave has a withdrawal limit for room and board, for surgery, for implants. So as long as within the withdrawal limit, yes, you can use your MediSave to pay. That's why that is where the S+3M framework comes in, you see? Right? So the 3 M's are. So after your subsidy will be your MediSave. So MediSave come in first, even before your MediShield Life. All right. So that's why the MediSave is meant to cover your deductible and co-insurance.
Okay, I think it's 8:36, so everyone has work tomorrow, so it's time to wrap up. But maybe to wrap this up, right? If you have one key takeaway that you'd like everyone here to take note of, what will it be, Felicia?
Don't compare IP purely on price. It's very dangerous. Because the moment I saw the planner, okay, I'm afraid I'm just afraid that people might just make an unwise decision to switch. Because one thing you have to remember is that every insurance company have a different business model. So when they adjust the premium, it's not purely because of medical inflation. All right. It can also be part of it is claim experience. So in other words, the insurance company who is the cheapest now, all right, their premium that they collect may not be sustainable. So they may actually increase their premium more, all right, in certain years or for certain age bands. So, and then in certain years, they may be the most expensive. Certain years, they may be cheaper. So you can't possibly be switching insurance company every year. It is definitely not good, you see. It is definitely not wise. So stick on to it, because different age band, also different insurance company are priced differently. So for example, AIA may be most expensive for the age band between 35 to 45. And then when they could be the cheapest between age 20 to 30 years old. So that is the thing, you see. So you can't always be just comparing on the price. Like for example, say pre and post, some providers will just post hospitalization, they only cover up to 90 days. Some will cover 180 days. And then someone will cover 365 days. So look at the features and ask yourself, which one do you actually feel is important to you? So put the price aside first. Okay, look at the features first and see which are the features that you feel is most valuable. All right. And so what I say, the premium is not the only thing, and it will not stay the same throughout the 20-year period. All right, because every insurance company, some will increase more in certain years, some will increase less in certain years. All right, so my main message, if anything, like what you say, Vivian, that I would like people to remember is that when you want to switch IP providers, don't switch because elsewhere is cheaper. All right, okay.
Yes, thank you so much for that, Felicia. I think a great reminder for us. And thank you for also walking us through all the various healthcare schemes and insurance plans that we have to know. So this comes to the end of the webinar. I hope that everybody that has attended has learned something new and is also more equipped to take charge of your health insurance and your financial security. So we're gonna keep this slide on so that you can scan the QR codes. We will also be uploading this webinar onto our YouTube very shortly. If you want to find out when this will be uploaded, You can follow us on our social media channels at MoneyOwl SG, or also subscribe to our YouTube channel at MoneyOwl SG. Thank you so much, everyone, for coming, and have a good
Okay,
evening.
thank you, everyone. Have a good evening and a good long weekend coming up.